This week, Westpac was the first major bank to raise longer-term interest rates by 30 basis points. That's despite the official cash rate falling at the last update. Earlier, I spoke to Westpac chief economist Kelly Eckholt and asked him why.
Well, we've seen quite a remarkable increase in wholesale interest rates since the Reserve Bank cut the OCR. And that's because even though they cut the OCR, they unexpectedly called time on the easing cycle. Financial markets weren't at all prepared for that. They had some expectations there could have been a chance of another rate cut, so they've had to remove that from their minds, and now you're seeing global financial markets adjust to what they think is a risk of a higher cash rate as we go through 2026.
Yeah, you do have the Finance Minister, Nicola Willis, telling people to shop around now. She says it's a good time to go looking for better rates. Do you think you might lose some customers over this?
Well, I mean, it's a competitive market, isn't it? So to the extent to which the interest rates are different, that's always possible.
The sentiment, though, was that, a lower OCR would see a little bit of relief for homeowners and perhaps give the economy a bit of a boost. Are the good times over already?
Well, I think it's probably a little bit too early to say that. I mean, I think the financial markets have overshot here. The Reserve Bank wasn't telling us that they were going to increase rates within the foreseeable future. Their forecast suggested that would be more like a 2027 affair, whereas the financial markets are looking at the middle of next year. I suspect they'll probably re-evaluate that as the distance from the monetary policy statement grows, and we may actually see some of these interest rates drop back a little bit.
Yeah, we did also see, though, this week the new Reserve Bank Governor, Dr. Anna Bremen, come out and say nothing is set in stone, and, she's not going to come out and say what might happen in February when we do see the next OCR rate, and that, anything is possible.
Yeah, I guess anything is possible. I mean, what she said, I think, was pretty sensible, because you shouldn't have a predetermined plan. Life is going to change between now and February, but I think it would be a really big shift to see them coming back in February and telling us that they were going to be raising interest rates any time particularly soon.
The cynical people out there will say that, raising those 2 to 5 year terms by, 0.30% is essentially about protecting Westpac's margins.
Well, what has happened with the wholesale rates, which is the rates that we pay to get the money on lend, those have gone up by 50 to 60 basis points. So you can kind of understand why there would be that upward pressure in rates. And indeed, if I look at margins, like the 2-year mortgage margin to wholesale rates probably is still quite a bit would normally be quite a bit wider than it is. So, I mean, I think there's actually a decent deal on offer right now.
Yeah, sure, but the counter-argument would be that Westpac raked in more than $1 billion. I think it was $1.2 billion, in fact, in the year to September, and surely there's a bit of wiggle room in there to give mortgage holders some relief.
Well, when the wholesale rates go up by 0.5 percentage point, I mean, I think pretty much anyone in their business would need to adjust their prices when they see that.